Hello and welcome back to a new episode of HKEXVoice, our podcast on the latest developments of Hong Kong and the region's financial markets. I'm your host, Jeffrey Young. With the reopening of our borders, international expansion has been a big theme for HKEX this year, with the launch or relaunch of key international products, as well as the opening of new global offices. Also, there's been new enhancements in the pipeline to help our international clients and investors to more efficiently and cost-effectively trade Asia in Asia. Now, joining me today to talk about our international strategy is Kevin Rideout, HKEX's co-head of sales and marketing. He will tell us more about the significance of HKEX's new offices in New York and London and our latest plans to grow international derivatives offerings and to attract investors. Always good to have you back on our podcast, Kevin.
Thank you, Jeffrey. Great to be here.
Now, Kevin, let's start with HKEX's new offices in New York and London, and let's put aside the taxi campaign for the time being. Kevin, can you walk us through the significance of opening new offices in these key financial markets?
Yes, certainly. I mean, essentially, it's about bringing the Hong Kong exchange story to the world. And if you think about it, first and foremost, the world is underweight China, and China is underweight the world. And so it's really vital that we are next to our customers around the world. We listen to them and respond to them and help them navigate the plethora of vibrant opportunities that exist.
Of course.
Now, our offices in Hong Kong, New York, London, Singapore, and Shanghai all offer unique perspectives and a diverse set of client bases, whether mainland middle class or QDII holders or UCIT funds in Europe or global retail. The same thing. We need to be next to them, we need to listen, and we need to respond and help them navigate.
That's fantastic, Kevin. So obviously, you've also been traveling around the world to meet with our key clients and customers from key centers, including London and New York. What have been your key takeaways from those conversations?
Yeah, look, I think it's important to say that it's great to be traveling again. There's nothing that
for sure
substitutes that that handshake and that face-to-face meeting. But look, it's clearly a very, very different landscape to when we were traveling before. And right now there are, various views on investing in China due to various different reasons. But look, there are three, I'd say, key thematics that I draw from all of the meetings that I've done. And one would be, international customers are in absolutely no doubt that there is an opportunity that exists in China and in Asia. The second point is they're just not sure when it will present itself back to them. So my third point is quite logical. People want to work with us to prepare for when that pivot does come and make sure that they're ready.
So, Kevin, the topic of this conversation is about international participation, international clients. So what is the level of international participation in the Hong Kong markets?
Jeff, it really depends on how you define it. International investors roughly represent about half of the volume in our cash market, and probably even more than that in our derivatives market. But the important thing to note, I think, is that these changes in its makeup can change very, very quickly. This year in particular, we've seen really big upticks from all across the Middle East, which has been well documented, but also from places like India. We've really been pleased to welcome those folks into the market as well. Just adds that extra layer of vibrancy.
Great to hear. So, Kevin, what's our edge then?
I think, Jeff, clients come here first and foremost, no surprise, is to interact with Chinese flow and Chinese investment decisions. So that's particularly key for us. I think supplementing that is clearly our stringent and vibrant listing regime, which has over the years seen great companies come and list here with us, particularly mainland China tech. And it's great also to see the new listing regimes, which will accommodate, in fact, international companies, as well as some of the newer economy companies that we're welcoming to see. I think that also gets supplemented in terms of a unique edge is our Connect programs. You have to recognize that our China connectivity, whether it's stock, bond, swap, or ETF Connect, and our suite of Chinese derivatives, renminbi, Hang Seng, MSCI, and also not forgetting the LME, where China is the largest consumer of base metals in the world. Nobody really quite tells that China story like Hong Kong Exchange does.
So, Kevin, you were talking about connecting China and the world, a key part of our strategy. Are there any data figures you can point us to quantify that?
Yes, certainly. I think the key standout would be if you looked at all the international investment into China, into the Chinese equity markets. Over 70% of that now comes through Hong Kong via Stock Connect, which is a great achievement. And furthermore, if you actually look at the MSCI China Index, which is an amalgamation of H-shares, A-shares, and overseas ADR listings, 9 out of the 10 of the top 10 by weight, market cap weight in MSCI China, are now accessible through Hong Kong.
How do you see the trajectory of this continuing growth of our Connect program?
Look, I think it goes back to what I said earlier. China is underweight the world, and the world is underweight China. So let's put some figures around that. China's weighting in MSCI World today is about 3%. Yet when you're looking at the GDP, it's 18%. So clearly in that direction, there's growth. And on the other hand, China's fast-growing institutional business is diversified into offshore exposures to the tune of just 8 or 9%. Now, typically, for a country with China's institutional footprint, we should be seeing about 40+% diversification. And that would be akin to what you'd see in the US, the UK, Japan, EU, etc.
So, Kevin, the Connect program has been in place for almost a decade, and we've been continually enhancing the attractiveness and competitiveness of these products. One of the latest enhancements is something called Synapse. Could you tell us a bit more about this and what this means for them?
Oh, yeah, happy to. Look, Synapse, it's incredible. But probably best to start with why we built it. We know that China's stock market settlement is effectively T+0. Now, if you look at the things where you've got that potential of an increased weighting that I spoke about earlier, we've just added another 1,000 stocks to the program, as well as some market structure increases, which will further shorten the settlement cycle, such as the block trade enhancement. The need to improve the post-trade environment is critical. We can't run around moving bits of paper faster. We've got to think of a new way of doing it, and Synapse is that new way of doing it. It's really sequential. It's really moving from sequential to unified, is what I'd call it. We're going to utilize DAML smart contracts, which will bring together the buy side, the brokers, the clearers, global and local custodians, and Hong Kong Exchange as a depository into one environment where we can all work on the same piece of work at the same time and get comfortable and execute the settlement.
So what would be the end result? Would we see many more participants take part in Northbound Stock Connect as a result of this platform?
Yes, we will. But that more will come from, I think, an increase in the opportunity or the weighting of China. But the thing that Synapse will do is it will eliminate the settlement failure risk by improving efficiency and saving time. I should say Synapse, however, will take time. It's a network, a community build. Our early adopters will be a great start, and that will start the rolling snowball effect.
Last but not least, looking ahead, what are HKEX's plans to continue building its international product footprint and its ecosystem?
Look, I think the product horizon is a really good one. I think products become relatively aligned with demand. You only have to look at HSTech, for example. You look at the listing regime change that we made that welcomed that big China tech. The next thing you know, we had HSTech ETFs, we have HSTech futures, HSTech options. So I do think in the next phase we'll see a similar trajectory with things like biotech or new energy, for example. Even the insurance industry could be indexed as well, given we've got so many insurance companies here in Hong Kong. The other area that we want to make sure we have is more international exposures here in Hong Kong, for the mainland to express themselves, whether international listings or possibly even expanding the MSCI suite. And I do think there's one other thing out there which I think is really, really kind of exciting. And I do think that renminbi will play a very important role in part of the future. If you think about it, Jeff, you've got the Middle East, South America in particular, are building up more and more renminbi as they receive more and more renminbi, and that will want to find utilization somewhere. We just got to make sure we are that somewhere.
Well, lots to look forward to, a lot of exciting developments, Kevin. As always, thank you so much for joining us today.
Thank you, Jeffrey.
Now, if you want to learn more about this podcast or HKEX's markets, please visit us at our website at hkex.com.hk. From all of us at HKEXVoice, thank you for listening and keep an ear out for our next episode. So long.